Next time you attend a financial services event, conference, or webinar, see how long it takes for someone to mention embedded finance. Chances are you won't be waiting long, and there's also a possibility it might be me who's mentioning it. But this is more than just an industry buzzword. There's a reason why the idea of embedded financial services in non-traditional settings is a hot topic and will continue to be so. Today, we're going to focus on 3 emerging use cases that will be big heading into 2023. Let's dive in. Use case 1, lending. So much of embedded finance's growth will come from B2B lending in what is a mostly wide-open market. This is essentially one company lending from its books to another within their ecosystem or on their platform, using the data they have on their business from working together. About half of SMEs worldwide have no access to formal credit. And as the world digitizes, the smartest businesses are looking deeper into new sources of behavioral data to assess risk and bring new financial products to market. The data lies in physical retail, where shops and pharmacies rely on credit to keep their store shelves full. Businesses like Field Inc. in Kenya help small stores pay only for the stock they sell, freeing up working capital to grow the business. The data also sits in digital marketplaces like Bukalapak in Indonesia, for example. This year, they launched a digital bank account for their 104 million registered users and 4 million merchants. It sits in POS systems for restaurants like ToastTab or SaaS platforms like MindBody, who both use their business management software to provide working capital for their merchants. It sits in new agricultural marketplaces where businesses like Tarfin or AgroClub are using their own risk-scoring models to provide financing for seed or grain purchases in what they're calling buy now, pay at harvest. These are just a few examples. Expect the industries, context, and data sources to proliferate over the coming year. Just follow the biggest banking-as-a-service players here like Goldman Sachs. They've just acquired GreenSky for $2.2 billion, a digital platform which serves a niche well. Want to fix up your home? Well, there's a loan for that. We'll be seeing more BaaS players make investments, acquisitions, or partnerships, which gain them access to new distribution channels. Use case 2, proptech. If you've ever bought or rented a place, you'll know just how antiquated and frankly unfair this experience can be. That's why property technology, or proptech, has been growing to disrupt and digitize the entire value chain for everything from searching, purchasing, financing, through to maintenance of a property. It's such a buzzy sector right now that Adam Neumann, everyone's favorite wee billionaire, landed over $300 million for his stealthy new proptech startup, Flow. So much of the friction in property is making payments and obtaining financing, and that's where embedded finance comes in. For example, open banking can help people pass landlord background checks and assess creditworthiness, like what Canopy is doing in the UK. We're also starting to see mortgage as a service take off, with Rocket Mortgage in the US enabling small banks to embed fully white-labeled mortgage services into their banking apps. All of this opens up financing opportunities to all participants within the property value chain. Imagine a property developer being able to build and compile their own mortgage directly to market, or a super app like Revolut pre-qualifying you to landlords in your areas for new rentals. Use case 3, embedded wealth. Investing as a service has been around for a while now. So businesses like Upvest, Alpaca, and Saxo Bank, for example, have a rich suite of APIs for everything from fractional share purchases through to custody. We're also seeing crypto as a service coming as well. So startups like Kepler help you embed automated crypto trading strategies. But embedding wealth into different customer contexts where a wealth service can add value to that context, that's what's next. Think about how passive your pension is. I bet you the average person watching this video doesn't even know how much they have to retire on. I know I don't. In fact, the global pensions gap, which is the difference between how much you pay into your pension and how much you actually need on retirement, is expected to grow to about $400 trillion over the next 30 years, according to the World Economic Forum. Pensions businesses could find ways to help people accumulate wealth much earlier in life, way more efficiently by combining things like savings, investments, life insurance, and asset management under one roof. These products could be embedded in new distribution channels. Think earned wage access services, which directly deduct money from your salary. These businesses could partner up with pensions and wealth providers to promote savings directly every month. Controversially, health insurance premium data could also help your wealth work smarter. Living with a chronic disease could have a huge impact on your cash needs at different points in your life, which a wealth provider could use to design a portfolio most relevant for you. Regulatory minefield though this is, providing transparent health details to your pensions provider can already lead to better enhanced annuities. You'll notice I haven't given examples here. To be honest, this is what I want to see the market do. And if you've got an awesome example, please do comment on this video. These are just 3 use cases that have currently got the industry excited, but the truth is the possible combinations are endless. Embedded services are kind of like a new secret burger sauce, which can be added to the middle of as many combinations of bun and topping as you can think of, binding them together and making something even more appetizing for financial services. While these use cases are emerging right now, thousands more are bubbling underneath the surface, ready to change what we see as financial services going forward.